Is the US dollar and its reserve currency status facing an imminent death? You're seeing some warnings from major news publications, warning about the end of dollar dominance. And you're looking at alternative assets like gold up around 10% year to date, partly as central banks like China's central bank has been buying, adding to their gold reserves. And then you look at other alternatives like Bitcoin up around 70% year to date. This is partly driven by speculative, worries of hyperinflation, where one person's willing to bet that Bitcoin will go to $1 million later this year. Now, this, in my opinion, this fear of hyperinflation in the US, it really misses the mark. Part of it's looking at the banking crisis and thinking, oh my goodness, we're just going to have to print trillions and trillions of dollars. I don't quite see that with the ongoing banking crisis, but I do understand these concerns and I want to address them in this video. If this is your first time tuning in, my name is Daniel. You're watching Unrivaled Investing. So let's continue to understand what's going on and why these concerns about the death of the dollar. Well, part of it is deserved, part of it is not. So the deserved element is that if you look at, the US being a top trading partner, historically they were. In 2000, all the countries in blue, the US was the number one trading partner to all those countries. Fast forward to 2020, and now it's China for the vast majority of the world. So this does sort of raise the question, well, wait a second. If you're a super productive country and you become the number one counterparty to all these countries, why do you need a third party currency to settle those transactions? And that does become a very real risk to US dollar reserve status. Why do you need all these countries buying your dollars and then effectively putting those dollars into your assets, your financial assets, your debt? And so that is a real legitimate concern. And I'd argue it's tied to U.S. productivity and U.S., our competitive advantages. Can we improve our relationship with countries around the world so that way we are more competitive? Legitimate question. And then you also look at what the U.S. has done with Russia in response to their aggression and invasion in Ukraine, where the U.S. and many Western countries have cut Russian banks from accessing their reserves and accessing Western banking, the SWIFT system. And you're starting to see some impacts. You've seen recent articles talking about how the Russian economy is starting to come undone, partly because, investment is down. They're having a tough time. Labor is scarce. And so there are secondary effects. You don't just need to have a hot war. You can have financial pressures if you are the reserve currency saying, hey, we don't want to transact with you. And so when you see this type of impact, other countries around the world say, well, wait a second, we don't want to be subject to the rules and, decisions, the financial and political power of, let's say, someone that we're not even the top trading partner with. So you look at countries like Brazil, like India, like South Africa, saying, hey, why don't we create a new global reserve currency so that way we don't have to deal with this. So you see articles, and this is back at the end of last year, BRICS exploring creating a new reserve currency. You see, and then you see what I would say a natural progression where China looks to complete their own yuan settled deals with various different countries. So most recently it's doing with an LNG, so an energy deal with the United Arab Emirates. And so this is saying, why do we need to own petrodollars? Why do you need to have that trade if we can just, settle it in yuan? And this is an ongoing concern for U.S. investors because they're looking at it saying, okay, a lot of countries around the world are going to be asking why rely on this when this can also be a legitimate concern, like what they've seen with Russia and the sanctions here. So you see Malaysia and China to discuss an Asian fund to cut U.S. dollar dependency. You see China's now become, the replacing the dollar. China's yuan has replaced the dollar as the most traded currency in Russia. This is not surprising as China is providing a lot of the materials it's expected to the Russian economy. And so what's going to happen to the U.S. dollar? What could be the impact if the U.S. dollar were to lose its reserve currency status? Well, first of all, in full disclosure, this is not financial advice. If you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. So a few quick key thoughts. The fears of a imminent dollar decline and death, this has been going on for some time. You can see the Rich Dad, Poor Dad author, Robert Kiyosaki, he's been talking about this for years. Back in 2020, he called out, the death of the dollar, and now is the time to buy silver. Since then, silver's up, I believe, about 20%. He also called out Bitcoin. Now, Bitcoin has done a lot better. I think broadly, the concern is if you're in for a period of prolonged inflation, which we might be in. We will see. I mean, you can make the arguments for, which is that you have structural inflation from things like removing China as your main manufacturer partner, and maybe you do more of your own manufacturing in your own country, in domestically, or you do near sourcing, and either way it's going to cost more, and so you're going to have greater deficits. So you can have things like that where you say, okay, I foresee higher inflation for longer. If that's the case, maybe we want to own commodities, things like oil, and look at what Warren Buffett's doing. He's been actively buying various different oil stocks, and he's certainly a child of history. So he saw what worked in the 1970s, and 1970s was one of his best performance decades, and he noticed that despite his incredible performance, oil prices went up just almost in tandem with his own. And so he could have just bought oil. So I think that is very much in his mind of, hey, what will the U.S. do right now to manage its deficits and its spending in the periods ahead? But it is important that these concerns about the death of the dollar has been around for some time, and well before 2020 as well. If you actually look at foreign exchange reserves, just the data, it does show that, yes, the U.S. dollar, as looking at various different central banks, what the various different exchange reserves that they hold, it has gone down over time from, let's say, mid 70s to closer to 60% now. The question is, if you look at the trading partner status, you'd argue it deserves to keep going lower over time. You look at what's going on with China, Chinese renminbi or yuan, that's a teeny tiny percentage of the total. You look at Japanese yen, the British pound, the euro. You're looking at this picture that changes what looks like very slowly over time. This doesn't look like something that's just an overnight change unless you have some sort of major, news sort of development. And we'll talk about what type of news development we would need to see from China in order to get their acceptance, I'd argue, to grow significantly from here. And that comes to this point, which is that you have really strong, and at least currently, foreign exchange controls or currency controls with China. For example, Chinese nationals are subject to a cap of purchasing up to $50,000 in foreign currency. So they are limited from exchanging their currency into foreign currencies at $50,000 per year. And so there's really strong limitations. And if China is not going to allow you to easily, take your currency and say, hey, we just did a deal. Now I want to translate it, convert it into something else, $100,000 is something else. I want to go buy a nice new car. There's a problem because the bank that you put it, this Chinese bank that you put it with, isn't going to let you do it. That creates challenges to say, hey, this currency is going to become the new reserve currency. So even though China is the number one trading partner, it's unlikely for you to see that sort of rapid growth where the Chinese renminbi or yuan becomes the reserve currency overnight, because it still has these really strong, currency controls. So that would be the major news you'd need to see from China to start seeing some changes. Now, you might see it in terms of the headlines like, oh, China's working with these relationships, but let's see how it plays out over time. What's it mean for the U.S.? First of all, I don't view this as an overnight development. I do view it as if it continues, if, let's say, foreign exchange reserves with central banks U.S. dollar continues to drop on a percentage basis, that partly could be deserved. Once again, like, who's your number one trading partner? Going back to that question, does it warrant? Is it a natural aspect of your transaction there? Oh, it makes sense. I'm doing a lot of business with this country. Therefore, I should own US dollars because I'm going to need those dollars to buy more of XYZ good. And so that is an important aspect to consider. Another really important aspect to consider. So that's not only the demand side, but also the supply side of US dollars is, will the US abuse its status as a reserve currency by just printing lots of money over time? And this is where it gets to the argument of, hey, have we let our deficits, our debts get out of control? And we will see in the decade or two ahead if we have. I do have concerns. A lot of smart folks have called it out. Stanley Druckenmiller certainly has. He's a prominent hedge fund manager, saying, look at our deficits, look at some of the entitlement programs we have, Social Security, look at a lot of different pension funds. And a lot of folks are going to be struggling to say, hey, we've promised, 7%, and where are we going to get that? And there's this big hole, and a lot of these institutions' entitlement programs are going to be either insolvent, or you're going to need to have the U.S. government print a lot of money to fill that hole and then become solvent, so that way people can get that. And then if you're printing more money, you have more inflation. So that is a legitimate concern. Then you see another aspect of, hey, maybe U.S. politicians play around with the deficit ceiling, the debt ceiling, in terms of like, oh, the debt can't actually go above this. I mean, it's just a ridiculous political theater that you're seeing, in my opinion, in terms of that debt ceiling. Because look, if you said these congressmen like didn't have health care and didn't get paid until debt ceilings was covered, it would get covered. But instead they do this ridiculous theater because they're willing. It's a dance that it's almost like you're putting your credit on the line. That's not just the politicians, but affects all of Americans. And that could, that type of development could hurt the U.S. status as a reserve currency. And so the secondary effects, if you start seeing something like that, and keep in mind, you don't want a U.S. default, because then the ramifications are huge. All these banks that own treasury bonds would then say, hey, we own a security that's default. So let's not go down that like super Armageddon financial scenario. Let's just focus on the like, hey, U.S. loses reserve status. So not a pleasant scenario, but what I would say is a scenario that is very possible to happen over time. Well, in that scenario, you have countries that it's either due to the demand, where countries say, hey, we don't need to own as many US dollars, or supply, because the US is printing so much. The monetary base is increasing so much over time. In that situation, the U.S. needs to get its financial house in order, because folks are saying, hey, we don't need to buy your bonds as much. In which case, if folks aren't willing to buy your bonds as readily, that means your borrowing costs go up. Well, I mean, it's not like, these are unheard of challenges. You look at a lot of countries around the world, they figure out how to do it. They say, hey, we need to be productive. We need to make sure we keep our own financial house in order. That means short-term pain. That means you got to figure out. And when I say short-term pain, I might mean, a decade plus, where country says, hey, we got to get our stuff together. We can't just run crazy, 5 to 10% deficits each year. So that is a really important aspect. But when you have higher borrowing costs, that does impact financial markets. That does impact things like entitlement programs. If you can't fund, these entitlement programs because your borrowing costs go up, people say, okay, well, what's reality, as opposed to living in fantasy land? So there's an aspect where a lot of people feel good now, but maybe it's based on things that they can't actually afford. And so long term, having people grounded in reality, I'd argue, is a good thing. Even if it does mean you could have pain, a lot of pain. I mean, asset prices would go much, much lower in these types of scenarios that I'm talking about. And that's why I think it's so important, if you're, an active investor, that you keep your grounding in both the fundamentals and valuation, where you're saying, hey, there's a real solid valuation backstop, and as well as looking at companies that are either global in nature, either they're trading on international exchanges, or they have international business. My number one, holding is an insurance company that is a globally diversified business. And so that's what I like to see. Like, okay, well, if one company's having a problem, or one country's having challenges, well, it has exposure to countries around the world. So you're sort of hedging that dynamic based on, the portfolio that you're constructing, but also saying, look, if we're in for a period of greater macro volatility, which I certainly think we could see, you want to make sure your portfolio, the valuations that you're considering, are helping you out there. If you're reaching for valuation, you're subject to more risk, in my opinion, because you go, oh, this is a great growth story. Well, you want to make sure you have some sort of valuation backstop in case there's, additional macro pressure in the future. So I think that's really, important for folks to consider as they consider their own investment journey. Once again, I share, I call out my individual portfolio and ideas to my subscribers at unrivaledinvesting.com. But I look at what's going on with US dollar, the reserve status. I don't think it necessarily happens overnight. I think this is something that plays out over many, many years. That's what I personally suspect, unless you see some major dramatic new headlines on, let's say, monetary policy from China on what they're going to do with their currency, making it more readily tradable. You need to have markets that can easily take, sizable, renminbi trades or yuan trades, where you could say, hey, we're not only going to hold it, but then we can invest it in something and we can feel comfortable investing in Chinese stocks. And I think after what you've seen this past year, a lot of folks are definitely not comfortable owning, Chinese stocks. Folks will say, oh, I'm never going to get the money back, so I'm not willing to do a deal there. Whereas with, US, you have the financial infrastructure where you say, oh, I'm going to get my buybacks, I'm going to get my dividends. And, I know the cash flows. There's a system that you can trust. Oh, okay, no matter where I am around the world, unless I'm going to get sanctioned, unless I'm going to do something really bad where the US says, hey, we're not going to, effectively allow you to participate, I'm going to have this sort of rule of law that I can trust. So that I don't think the demand for US dollar necessarily evaporates overnight. It can continue to go down from, let's say, the 70% the where it was a few decades ago to 60% now. Maybe it goes to 50, maybe even 40 at some point. But I'm also looking at it, I'm thinking, who is going to be the alternative currency? Maybe it is something like gold that you are starting to see people, buy more of, because there's this concern of, hey, the US isn't handling the dollar from a supply perspective very well. Partly, you see this banking crisis, then you might see an entitlement problem later on. So that's the concern of, hey, how do the US politicians act in a responsible manner? And we will see. It depends on the leadership that impacts whether or not the US keeps its reserves, US dollar reserve status. If this video has been helpful for you, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in to Unrivaled Investing.